Hello students, good morning and welcome back to the online class. So we'll continue with the 24 marks problem. So in the previous problem we solved two 24 marks problem, that is a full-fledged problem, that is trading and P&L account as well as the balance sheet. So again we'll solve with another 24 marks problem. Okay, you take down this problem. So take down fast. Thank you. So after this you take down the continuation part of trial balance. So it's a continuation part. So this is similar to the previous problem, but there are slight changes in the adjustment. Okay, first we'll classify the item as the trading, profit and loss account and the balance sheet. Okay, first you need to classify the items on the basis of trading account, P&L account as well as balance sheet. The first item, that is drawings. So what is the treatment for drawings? You have to deduct that from the capital in your balance sheet. So in your balance sheet you have to deduct from the capital. Then stock on 1/4/2020. So 1/4/2020 is the opening date. So this is the opening stock. They have given the opening stock of both the department, that is department A as well as B. So opening stock should be debited to the trading account. So opening stock is the first item in the trading account. Then they have given purchases as well as wages. So both are indirect expenses. So they have to be debited to the trading account. So purchases as well as wages should be debited to trading account. Freight and carriage is a direct expenses. So freight means it is nothing but goods or cargo. Means the goods or the cargo things carried by the ship, train, truck or aeroplane. Carried by any mode of transportation. Now we are carrying goods. Goods means it is direct thing. So the freight is the direct expenses. So freight is nothing but it is the goods or cargo carried by the any mode of transaction. That is what freight. You have to pay the money. Okay, that is called freight charge. Or the carrying of goods from one place to another. Okay, the carrying of goods from one place to another, that is what freight. Okay, so freight means it is a transfer of goods, so it is direct expenses. So debtor, furniture, bills receivable and machinery is an asset, so you have to take it in the balance sheet. So next, salary. So salary is an indirect expenses, so P&L account. Advertisement is given after production, so P&L account. Commission is a P&L item. Rent, rates and insurance, again P&L item. Discount, printing stationery, P&L item. Okay, it's an indirect expenses, that is office expenses. Fuel and water. So fuel and water is required for manufacturing the goods. Fuel and water is required for manufacturing the goods, so it's a direct expenses, means the item relating to manufacturing sector. So direct expenses, debit side, that is trading account, debit side. Okay, fuel and water is a trading item. Now bad debts. So bad debt is the P&L item. So last case we followed one format, right? Bad debts, add provision for doubtful debts or reserve for bad debts or reserve for doubtful debts. less old provision. So listen, if the bad debt is that provision you have to follow, that format you have to follow. But if the bad debt is given in trial balance, only one entry you have to pass, that you take it in the P&L account. Okay, you have to know if it is given in the adjustment, first you take in the P&L account, then you deduct from the debtor balance. But if the item is given in the trial balance, means only one entry you have to pass, either trading or P&L or balance sheet. So as the bad debt is a P&L item, we take it in the P&L account, so it is not once again deducted from debtor. Why? Because if that item is given in the trial balance, means it is already adjusted from debtor. Okay, the debtor balance what they have given, it is an inclusion of bad debts. Inclusion means the balance already included, either is added or deducted. Okay, so bad debts usually they deduct, so it is already deducted from the debtors, then they are given the net figure. So again, once again, in the closing balance you are not supposed to deduct the bad debts from the debtor. Okay, if the bad debt is given in the adjustment, means that is a current year transaction that is not yet adjusted, yet to adjust, so it is called adjustment. Yet to adjust, so you have to take it in the P&L account, as well as you have to deduct from the bad debt, sorry, debtors balance. But when it is given in the trial balance, only one entry, either in trading or P&L or in the balance sheet. But if it is given in the trial balance, means it is already adjusted from the concerned asset, so you have to take it in the P&L account. So general expense is a P&L item, cash in hand is an asset, capital is a liability, sales is the trading credit side, creditors, bills payable and bank overdraft is a liability. If you find it very difficult to identify the item, you just see the columns. Okay, debit means asset or expenses, credit means liability or income. If you know that rule, then you can classify the item. Now you see the adjustment. Okay, first adjustment, that is closing stock, that is 31st-3/2021. So closing stock is a trading item. Provide 2.5% reserve for doubtful debts, that is the provision for doubtful or reserve for doubtful debts. So you have to follow one format, that is bad debts add a reserve. This is a new reserve. If the item is given in the adjustment, then it's a new reserve. So 2.5%, 2.5 means 2.5%. Okay, this is percent. Provide 2.5%, you write percent here, percent 2.5% of reserve for doubtful debts. Okay, the doubtful debts is created on the net debtors. Net debtors means after adjusting the adjustment items. So you know what is the debtor value which is given in the trial balance, and you see the adjustment, whether any adjustment that affect the debtor balance. Only point number 2. Okay, this we are calculating, only this is the only item that is affecting, because this bad debt, it is already adjusted. If this bad debt is given in adjustment, then you have to deduct that balance from the debtor, then you have to calculate 2.5%. But it is not given in the adjustment, it is given in the trial balance, so there is no other items to deduct it from the debtors balance. So this 2.5 you can calculate from the debtors. 5% depreciation P&L item, as well as you have to deduct from the concerned asset, that is machinery. Okay, the next one, you read the next one. See that 800, that is the insurance paid. Insurance paid has been paid for 1 year ending 36/2020. In the sense, 800 what you paid, listen, 800 what you paid, that is up to 30th/6/2020. My financial year closes on 31st March, correct? So this is 2021, okay, not 2021. You make it 2021, yeah. This is 2021. 2021. Okay, till 2021. But you paid till 30th June 2021, means excess of 3 months you paid in the current year. Excess of 3 months you paid in the current year. Okay, so now till 31st it is allowed, because that is the expenses relating to the current year. But the 3 months excess what you paid, that is disallowed, in the sense you have to deduct. You remember one logic, that is the current year item you have to add. If it is of previous year and the next year, you have to deduct. Previous year ಮತ್ತೆ next year na balance ಈ ವರ್ಷ ತಕೊಳ್ಳಿಕ್ಕಿಲ್ಲ, so you have to deduct. Now how to calculate 3 months? See how means you have to calculate the prepaid money. 800, that is for 12 months, means full year. Here they have given it has been paid for 1 year, correct? You want what is the prepaid amount for 3 months, that is cross multiplication. So you have to calculate what is the prepaid money. 8,800 into 3, that is 2,400 divided by 12, it comes to 200. So this 200 is the prepaid money, prepaid insurance. So prepaid insurance, first you have to deduct from insurance 6,400 minus 2,000, what you get, that you have to apportion among two departments, and this 200 should be shown as an asset, because the asset which is already expenses which is already paid, when you take it to the next year, again you are not supposed to pay that 200 because it is paid in the previous year. So it is an asset for you. Next year you have to show it as an asset. So when we close the book, we show it as an asset. Okay. Next, provide wages due. So here it is already apportioned, the wages already apportioned, that is outstanding wages. So first what you have to do, the what wages you paid in the current year, first you have to apportion among A and B, then you have to add this figure, because here the apportionment figure they have given, not the total value, the apportion, the distributed value they have given. So first you have to distribute the actual wages paid, which is given in the trial balance. After that you have to add this. See point number 6, here the total value of outstanding is given. So first you have to add this 1000 to this figure, that is 12,000 plus 1000, then you have to apportion. If total is given, you add to the total, then you apportion. If apportionment is given, first you apportion the original wages, then you add the wages. Okay. Now this is very important. Point number 7, they have given the ratio. You see the ratio there. See the last one. So this is 2021. You make the changes here, 2021. Now, and here you have to write the percentage. Okay, this is percentage which is not given. This is percentage. Okay, per year provide 2.5% of reserve. Now, last point, expenses are to be borne by each department in the proportion of turnover. Turnover means sales. Sales. They are not given whether they have to include transfer. If they, in the absence of the information, if there is any transfer, you have to add transfer. If they specifically give you have to exclude transfer, then you take only the sales. Okay, but in this problem there is no transfer only, so only the sales value. Now what is the sale of A and B? See here, it is 3 lakh and 1 lakh. It is 3 lakh and 1 lakh. So this, on this ratio we have to apportion. Now how to find the ratio? Say here, both this side we have 5 zeros, you got the 5 zeros. So remainder of A, that is 3, and B, that is 1. So the ratio is 3:1. So all the expenses need to be apportioned on the basis of 3:1. If you want, you can take down this particular point, then you can solve the problem. If you want, you take down this point, how to calculate the ratios. You can take down as the basis of apportionment. Then you take 3 lakh is to 1 lakh. Then you write 3:1. So if you're done with this, then we'll proceed with the accounts. That is, okay, draw the lines for trading and P&L account. So departmental trading and profit and loss account for the year ending 31st March 2021. So draw the lines. So, okay, we'll start with the trading account. So, first item in the trading account, that is opening stock. So, write two opening stock, 90,000 and 35,000, which is already apportioned. So, total 1,25,000. So, after opening stock, they have given purchases. So, you have to take only the trading items. So, the next trading item, that is purchases, they have given the apportionment 2,85,000. It comes to 2,85,000. So, after purchases, they have given wages. You write two wages and outstanding, and listen one thing. So don't write a figure. So see the problem there. So wages, that is the total wages, they have given it as 30,000 and 6,500. They already apportioned the balance, that is 30,000 and 6,500, and the outstanding wages is 1,500 and 7,000. So it is already apportioned. So you add it to the apportioned value. For department A, 30,000 plus 1,500, it comes to 31,500. For department B, it is 6,500 and outstanding 700. So it comes to 7,200. So total 38,700. So after wages, you have one more expenses, that is freight and carriage. So write two freight and carriage. Okay, after freight and carriage, fuel and water. Next direct expenses, that is fuel and water. So after fuel and water, there's sales, that's an income. So that by sales, that is credit side, sales credit side. Then the closing stock. Then the closing stock. So these are the direct expenses as well as the main revenue and unsold units. Now you find the total, do the total of the department A and department B and total column. Then you find whether they have incurred loss or profit. Whether they incurred profit or loss. So the total is, so if here it is gross profit. The total is 3,85,000, 1,30,000, that is credit side. Total is more than the debit side. The difference is 58,000, 1,150 and 59,150 is the total of gross profit. So when you write two gross profit, then you write by gross profit. Next you have to start with by gross profit. Okay, so next we have to record all the indirect items. The first one, that is salaries and outstanding. So listen, so they have given the total salary of 12,000 and the outstanding of 1,000. So total comes to 13,000. Now you have to apportion on the basis of 3:1. So it comes to 9,750 and 3,250. So next one, advertisement. There is no outstanding or prepaid, so directly apportion the value. Next, commission. So write 2 commission. So no outstanding or prepaid, so directly you apportion the value. Next, rent, rates and insurance. There is a prepaid, so prepaid should be deducted from the value. That is a total insurance. So what is the value of prepaid? The amount of prepaid is 200. So how you got 200? So I explained you when I was explaining the point, that is adjustment. So 800 is the total amount for 800 is the total amount for 1 year, correct? So 800 is the total amount for 1 year, that is means 12 months. I want what is the prepaid money. The prepaid is for 3 months. So cross multiplication. So 800 800 into 3 divided by 12. 800, that is for 12 months. We want what is the prepaid amount for 3 months. Why 3 months? Till March it is allowed. From the March, that is of next year, that is disallowed. So March means April, May, June. June 30th. So June you have to include. So June 30th till 3 months. It comes to 200. Now if you deduct 6,400, sorry, if you deduct 200 from 6,400, you will get 6,200. That you have to apportion on the basis of 3:1. Okay, next item, discount. 1,000 is a discount, so you have to apportion on the basis of 3:1. Next item, printing and stationery on the basis of 3:1. Next, bad debts. So write amount in the inner column 1,320. Bad debts. What is the format? To bad debts, you have to add a new provision. Here it is doubtful debts on debtors. Now there is no transactions relating to debtors which is given in the adjustment except doubtful debts. I'm talking except doubtful debts. If there is any transactions in the adjustment that is relating to debtors, first you need to adjust that balance, then you have to calculate the provisions. But in this problem, only doubtful debt is the only transaction that is affecting the debtors and no other transaction which is given in the adjustment. You have to exclude the trial balance item when you calculate net to debtor, because trial balance item which is already adjusted, again you need not adjust that balance. Okay, but adjustment items you need to adjust that balance in the balance sheet, right? So there is no other entry, no other transaction except doubtful debts, so it is directly calculated on debtors. That is 48,000 into 2.5%, so it comes to 1,200. So if you, there is no old provision, so old provision is given in trial balance. There is no old provision or provision for doubtful debts or provision for bad debts. So the total itself, the total of this process, that is 2520. If you apportion on the basis of 3:1, it comes to 1890 and 630. Next we have one more item, the last item, that is depreciation. Sorry, before that we have general expense, then depreciation. So general expenses, that is 3600, that is 3600 in the ratio of 3:1. Depreciation, that is 5% on machinery. So total value of machinery is 1 lakh. On that 5% it comes to 5000. Okay, now we have to find whether it is net loss or net profit. Now first you do the total of each department. Okay, so when you compare department A debit as well as credit, your credit side is more, so it is net profit for department A, that is net profit for department A. But when you compare department B ka balance, that is debit and credit, your debit side is more than credit, so that is net loss. If you do the total of debit side, you will get 9380. The total of debit side, that is of department A, you will get 9380, means that is net loss. So you write by net loss and the value under department B. So department A incurred net profit of 29,860. So first you have to compare the balance of each department from debit as well as credit side. Then you have to come to the conclusion whether it incurred profit or loss. So in this problem, department A incurred net profit of 29,860, whereas department B incurred the net loss. The department A earned, department B incurred loss 8,230. Okay, so net profit you have to add it to the capital, net loss you have to deduct from capital. So the total, so you can do the total column. Okay, so department A and B you add and you write in the total column on the both the side. After that you draw the lines for balance sheet, that is balance sheet as on 31st March 2021. Okay, which is the first item? You see the trial balance, the first one, that is debtors. So debtors, so for 8,000 there is only one transaction. There is only one transaction for debtor, that is provision for doubtful debts, that you have to deduct. So the net figure, that is 46,800. Okay, next item, furniture. There is no adjustment on furniture, so write the amount directly in the amount column. Then bills receivable, no adjustment. Then machinery, there is an adjustment. Okay, if there is any adjustment, you write the figure in the inner column, then you make the adjustment, then you take to the outer column. That's all. Cash in hand, then capital. So capital, we have to make some adjustment on the capital. So capital here. So debtors less PDD, provision for doubtful debt, that you need to adjust from the debtors, and the net figure you have to take it to the outer column. Whereas furniture and bills receivable, there is no adjustment on these two items. So you directly take the balance in the outer column, as we don't have any adjustment. So but machinery, there is an adjustment, that is depreciation. So depreciation must be deducted from the machinery. So from 1 lakh, if you deduct 5,000, you will get 95,000. That is the net machinery what you get. Then cash in hand, there is no adjustment. They have given the closing balance of cash. So 1,500, that is the cash balance.
But when we take capital, we have to make some adjustment. That is, if there is any additional capital, you have to add. If there is any if there is net profit, then you have to add. A net loss, you have to deduct. Then if there is any drawings, then you have to deduct. Interest on drawings, then that you have to deduct. Interest on capital, you have to add. Okay, now capital, there is no additional capital, then we will move to the next item, that is net profit and net loss. So department A incurred the net profit and department B incurred department A earned profit, whereas department B incurred loss. So first we have to make the adjustment. So write add net profit, that is department A. So department A incurred the net profit of 29,860, that you have to add. If you add, you will get 1,87,860, that is the net profit. That's the capital after adding net profit. But the department B incurred loss, right? So that you have to deduct. So you have to deduct net loss that is incurred by department B, 8,230. The net capital you will get after adjusting the profit and loss, that is 1,79,630. Okay, next. So if there is any drawings, then you have to deduct. So there is a drawings of 7,580 that you have to deduct. So less drawing 7,580. The net figure, that is 1,72,050. That is the net capital. Okay, after that. So next item, that is creditors, that is the liability. Then bills payable, there is no adjustment on bills payable. Bank overdraft, there's no adjustment on bank overdraft. Next, you have to adjust the adjustment items. So first adjustment, that is closing stock. Closing stock is an asset. So write stock under the department A, B, sum it up and write in the total column. Okay, next. If any expenses prepaid, then that is asset. If any expenses outstanding, then that is liability. Next, you write outstanding expenses, that is wages, department A as well as department B. Department A as well as department B. Then there is an outstanding salary. So department A and B, wages outstanding, you have to add and you have to take this total value to the outer column. Then salary, you have to take the total column to the outer column. That is given directly. If you do the total, your balance sheet will tally. So the balance sheet total 2,73,500. If you once you check the totals, if there is any total error, then you please bring it to my notice. Okay. So if there is if the balance sheet is not tallying or any figure it is wrongly entered, or if there is any mistake in the totaling, then you please bring to my notice. So I conclude today's class till here. So next problem we'll see in the next week. Okay. So till there, take care. Bye bye.